Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream's about integrating Bookmap Orderflow tools with auction market theory using a volume profile in the intraday developing time frame. This is a advanced trading process, and it's about the Trader Lab is about advanced trader education, understanding market mechanics, how the market works, why it does what it does, how at times you can get in alignment with it with structured trades. And it is a community of like-minded traders who come together to leverage their collective experience. It doesn't matter how long you've been trading, but if you have been trading, you probably have found that in spite of it all, most of us have random outcomes in a random environment, but we don't have a statistical edge. So the idea of the Trader Lab is to help traders understand the business of trading. And the business of trading is probably very different than what most of us imagine it is. So let's get to it right away. We have a lot to cover today. And please, if you're in the stream here, if you're in YouTube or the Bookmap Discord Trader Lab community, please remember I'm streaming from Costa Rica. I have an unstable internet, and if for any reason I have to drop out of YouTube, this stream will be continuing in the Bookmap Discord Trader Lab. There's a link in the bottom of YouTube. You can access the Trader Lab. There is no cost. As well as this stream will be posted later in YouTube should I have to drop out of YouTube because of technical challenges. And again, welcome to the Trader Lab. Appreciate you stopping by. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. If this is not a trade calling room, but if I get into real time, we'll talk. The other part of this is I'm going to show you structured trades and some advanced processes that are available for you in the Trader Lab community. And like everything, this is the business of trading. This is not Fantasy Island. And this is for serious traders who are looking to develop the business side of trading and career building. That's the Trader Lab. So if you're inclined and you're interested in that, then by all means. And by the way, this is what these, there's 60 PDFs of structured trades you can download. They look something like this. They are broad strokes. I selected them as a basis for traders learning and understand auction mechanics. Some of these are actual trades. Some of them are screenshots. And again, I'm not a vendor. There's no cost for this. I'm just someone who's been doing this for 45 years, professionally and otherwise. Now, higher time frame. This is Investor RT. This is my higher time frame charting software. It also exports levels to Bookmap, which is an order flow tool. Hide here. And it's an important element. All these pieces fit together. Now, this is several days ago. Now, this is day before yesterday. This was our, now, going back over this, this is the intermediate time frame. These are RTH candles. This is called a micro composite. What it is basically consolidations in the daily time frame. Now, what's important about this is the volume profile, very simple. It's the auction. What is the auction? The auction is the participant behavior of trying to find out what's too high and what's too low. Not complicated, but it is random. You'll notice up here we have wicks. That says sellers are in control here. And the buyers are down here, so it creates our rotations. This orange line is the retail price in this consolidation. Now, this is last Friday, a week ago from today, and the market was bearish until news came out. And remember, news disrupts the auction. It causes a reaction. And the news was that there might be some delay in the tariffs that POTUS is doing and all of that. And it turned it from sellers to buyers. Then on Monday, we gapped higher and we tested this consolidation. Too low, too high, high volume here. And you'll notice where we came back. We squeezed out these shorts. Thanks for playing. You get the coupon to the buffet in the casino. And then we tested up in here. And I was anticipating further out squeeze and then mean reversion back here. Well, it only got this far. And then this day, where I was looking for up, we did such and such. Now, and that changed everything. Where was our target? Here. So this, and you'll see the arrows, and this is all before yesterday. And then down here. Now let's jump ahead one day. Now the reason I'm showing you this, it's not to say right, wrong, or indifferent. That doesn't exist in our business. What exists in our business is understanding market mechanics. So yesterday, this was our target, remember? So let's go back. Where was the target? There. Day before. Yesterday now. Target. And it could do anything. Never has to get there. It could, right? And then the next target's down here. Now, let's jump into today. But before we get to today, I want to show you a structured trade that's set up in the ETH. And we had news, as you know, but let's talk about this trade. This is a short, and I was talking to one of our participants in Trader Lab, and we were reviewing the ETH and talking about structured trades. Now, this is a structured trade. Why? Well, we broke under yesterday's low, okay? So when you break under a low, that's a significant event. Liquidity came into the book here. This sets up a short right here. Now, but here's what's important. I want to show you something a little interesting. Orderflow. Bookmap. Look, this liquidity comes into the book right here. And then there was an announcement which happened here. ECB, I think, and I can't remember, there's so much going on today, so excuse me, but I think it was that there will be some flexibility on tariffs. News disrupts the auction. But here's what's key, this. Before the news comes out, liquidity comes in. Now, I have a bit of a theory about this, and it is that there are very few secrets or surprises. If someone's going to make an announcement, whether it's the ECB or wherever, and we can always be surprised by news events, somebody knows, especially if it's on a piece of paper or memorandum, and it's going to be an announcement. So why does this liquidity come in here before the announcement, which is here? That's just something for this astute audience to consider. Now let's look at this. So this is a short, and this is a Trader Lab structured trade. If you trade ETH, not saying you should. And down here we have absorption. That's what's going on here. We have a sweep setting up here, and there's your sweep. This is a actual buy trigger in the Trader Lab, assuming you vetted it. Now, nobody knows. So let's get off this. I knew this was going to happen. You know it's going to happen. And you've got a skill that none of us have. It's always clear in hindsight, but we don't trade hindsight. We take risk in order to have potential reward. So if you took the short off of yesterday's low, which is a decent trade, I don't have a problem with this, do you? And then we get the news. Now what? News event comes in here. It also turns out to be the ETH low. Watch. Now, let's just continue. So when we get the news, we get the squeeze. The market is short. Now let's watch. Now we're going to go into RTH. By the way, if you have questions, please post them. Please give me a little audio and screen check in YouTube and the Bookmap Discord Trader Lab community. Post your questions. I'll do my best, as they say, to hang out with you guys. Thank you, Dan. Dan, how are you today? So, we're coming into the RTH Open. What might we want to do? Great question. Well, for me, if I have a news event, now here, watch carefully. What was this? Liquidity. Absorption. Absorption. This is the absorption detector. I don't need an absorption detector to see absorption, but I thought I'd put it on here for your dining and dancing pleasure. This is a sell sweep. Often, and it's not mechanical, We have a confluence of events right here in the order flow. This is the edge that an order flow tool like Bookmap can give you. And again, none of this is mechanical. It is informational. Let's use the term informational. It gives you insight. So right here, this says possible counter rotation. Everything is saying right here, be careful, and possible reversal. No clue about this. This is news. But somebody knew about it. Then what? Off we go. Lovely, having a great time. But what is this? What happens over here? Liquidity comes back in the book, right here. This is material. Let's watch. Now, let's go into the RTH open. No clue. We are the clueless. Watch. Now, a couple possibilities. And I always say in Trader Lab, and you can learn all of this, I always say there's three basic elements, or let's say broad strokes, in your trade plan. There's directional, there's mean reversion, which is outside in trading or rotational trading, back to the mean. And the mean is a high volume location. So outside in, think of a rubber band gets stretched and then it comes back. And then it stretches out the other side and then it comes back. So that's one piece. So we have mean reversion, we have directional trading, and then we have the open. The open is a unique, specialized conditional trade process. It's the last place anybody ought to trade unless you already have an edge and you've done your work and you understand market mechanics to a very high degree, and you don't trade the open. But I'm going to show you opening trades. This is Trader Lab processes. You can learn this. Now, there's a couple things to think about. Number one, the market is short. Number two, if we get selling on the open, the possibility exists to come back around and squeeze out the early sellers, and then the true move, maybe, if you think the trend is down, which for me it is down, then okay, thank you, Dan, lovely weather. Well, it's nice here in Costa Rica also. So, by the way, I am streaming from Costa Rica, everybody, so put your helmet on, and who knows. So, RTH open, 8:30 Central Time. This is the RTH open. This is called Developing Volume Point of Control. Okay? This is the full session VWAP at the time, so we're below there. Overnight volume point of control, highest volume in the ETH. All these elements are material. And this sets up our first short. And where are we trying to go? Notice the liquidity, again, came back in the book. And this is where the news event took place. And this is where the ETH low is, high probability. All these statistics are available in Trader Lab. You can use the link in the bottom of YouTube if you're inclined. There is no cost. So, first trade is here. Now, again, open, aggressive, not a place for many to trade. Like everything, it's up to you. But in the Trader Lab, it's about edge. What is an edge? Statistical probabilities. What is the environment we're operating in? Randomness, rotations, and 100% random. Why is it 100% random? Because at any time, the trades can be disrupted by any kind of input, whether it's an algo, whether it's icebergs, or whether it's somebody tripping over the cord at the CME. And that's happened, by the way. Not literally, but figuratively. Years ago, I was trading, and believe it or not, the servers at the exchange went down. I got to tell you, that'll tighten your stomach. Okay, here we go. So, market opens. Remember where our target is. What happened is the news set up a squeeze. Well, if we understand the trend is down, and if you missed the beginning of the stream, refer back, watch this stream. This is a key stream if you want to understand market mechanics and the Trader Lab advanced trading methodology, which you can learn. I believe anyone can learn how to trade if they put the work in. Whether or not they will be able to trade is another issue. Most traders are looking to play a video game and they forget this is business. So if you want to be in the business, then you have to approach it like a business. And yeah, it's a great business. But also you got to understand that it's a business of randomness, and it's going to challenge you beyond anything you imagine because it's counterintuitive. And the term intuitive means we're not wired to operate in this environment. And that's what will get you. So buyers are here, sellers are here. Developing volume point of control. ETH volume point of control and ETH or full session VWAP too high. So I know when I open that I'm looking for a short and I'm looking for this. That's all I know. That's as deep as this gets. And this is a structured trade in Trader Lab, and it's an advanced methodology. Watch. So buyers are here, buyers are here. Selling iceberg, buy stops. You'll notice there's not a lot going on in the stopateria. Only 9. I call that stop divergence. Now there's only 3 here, so I'm not seeing the stops. Sellers are below the buyers here. This is a trigger. Now this is advanced and it's aggressive. Doesn't have to be your trade, doesn't matter. This is not about anything, just it might be your trade. And again, the open is not where anybody should trade. So this is a short. There's your VWAP in mid, and you're going for this. So let's just see how this works. This is called VPOC migration. I'm going to label it. And if you guys follow the stream, and there's a whole library of these streams available to you in the Bookmap Discord Trader Lab community, and a whole library of documents, statistical probabilities. By the way, why the Trader Lab? Because it takes a team to do data mining, research, structured trades, share ideas, mutual support, camaraderie. It's a team effort. Watch here. Watch here. Now, when we cross here, now remember, this is our target. When we cross here, this trade has a problem. Resistance is here, and here's why the open is such a dangerous location. If the market is bearish, if you will say, we can agree, and buy stops are over the opening swing high, where might the market come? Take out the opening swing high. So sellers in this leg, this is why it's a separate trade plan. Target is here, not so much, and then it's trade management, and then whatever, depending how you do this, either you took a trade at the RTH open or you didn't. What I like to do, well, it doesn't matter what I like to do. I think the prudent thing is, unless we just open and it does the Acapulco cliff dive, that we can anticipate the opening swing high, which is here, getting taken out. Now, let's go to where I think the better short is. ETH mid is a high probability statistic. You can get this in Trader Lab. High probability statistic. We come over the full session VWAP, and let's take a look at the order flow. In the book, and this is, and I don't spend a lot of time on heat map. Today I'm going to pull, it's like pulling out something and saying, here, let's examine this today. Liquidity comes in the book. What this is showing me an add to the limit order book. Watch. Absorption, 60 selling icebergs, 22 buy stops. Thanks for playing. Broker gives you the coupon to the buffet. So absorption is here. The break is the trigger. This is where the sellers are here, actually, but sellers get below the buyers. There's your intersection of liquidity, icebergs, and the break change. This is an area, I'm going to go into microstructure. I hope this is good for you guys. I got so much to tell you today and share with you, so I'm not sure how much I should, but I think I'm going to try to focus on a little different element here for you. This is a micro high volume structure. And in Trader Lab, what I try to do for our traders is help you understand market mechanics. But here's the thing, and here's, I think, the real power of this. The auction is a generic process, and it happens in something called fractals. And what's a fractal? They're mini auctions. That's really all they are, and there's no precision. So the sellers are here. There they are. And the buyers were here. There they are. The last place I had buyers was there. So here, 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 buyers, sellers, consolidation. You've all seen this before. The volume is in here. Now, this is just a trigger. It's no big deal. Watch. Buy sweep. So watch. Buy sweep. Volume. This is your outside edge up here. This is your sweep. Now, if you sold this, you'd be running a stop about 3 ticks above here. So basically, you would be, let me just look, 30.75. If you sold this, you would take a stop. Let's watch. Trigger again. Now, if I take a stop, I just take the stop. I just don't think about it. Well, I think about it, but I understand I'm probing the market for position. This is me. I'm not saying it should be you. You don't have to do anything. There's my sweep. This suggests counter rotation. So if I took a short here, I might take a stop. If I take it here, I've got the same structure. Let's look. Micro, high volume. Let's just look at this again. Let's do the same process. Let's watch. Volume is here, sweep is here, sellers are here, buyers are here. Break below, I test the volume. Break again. This is another short. 3 ticks above here is your stop. You got to vet these for yourself. Watch. Where do we come back? Here. So, short, risk neutral. Short, risk neutral. Trying to come back here. This is called mean reversion, underlining the word mean. Watch. Watch the behavior. Target was here, right? Okay. Watch. Now I'm going to show you an advanced Trader Lab structured trade right here. If you have questions, post them. I'll do my best. This is advanced. You can learn this in Trader Lab. What happened here? Let's come back. Let's come all the way back. What happened? This was a news event. The liquidity came back in the book here. Let's come back now. Let's spread this out again. I get my target. I bounce. I break below. This is a structured trade and advanced. You can learn this in Trader Lab. Not saying it's your trade. I'm just saying it's a trade. Watch. Watch. This. This is advanced. This is a short. And we have the Michigan final. It's inflation, and it's a very euphoric event. Remember where this is, right here. So right here, we hit this, we break up. Okay, when I break below it, this is a structured trade advanced in Trader Lab. Right here, short, short. This comes into the book. Target, and then wherever. Michigan pre comes out, final, I mean. Where do we come? Here, short, report, short, support, short, liquidity is gone, watch. See it? That's advanced. This is Trader Lab, though. You can learn this if you're inclined. There's more. Now, guys, here's the thing, and I posted this in Trader Lab, and I was very busy this morning, you might say. So and usually I'm very active, of course, in Trader Lab to support the community. This, by the way, is our next target. Oh, and you're going to say, how do you know that? Well, I don't know it's going to do it, but what I do know is it's right there. And I do know that 2 days ago, I put my little arrow there. So this day was to come here, and then today to come here, and there's more. What's under here? Stops. And where's our next potential target? Well, there's stops under here and there's this. So at some point, maybe, and I was going to say maybe because it's not my job to predict. I'm not in the prediction business. I'm in the maybe business. Maybe it'll do this. Maybe it'll do that. Maybe it will. Maybe it won't. So this is yesterday, and this is the target today. Anyway, just want you to see where these levels are coming from, and that's why they're over here. Now, let's keep going. Follow the yellow brick road. I'm going to show you some more. Target, right? Liquidity. Let's watch. Remember, let's watch. Now this one, this here is also a short, but it didn't come back up here. So nothing here for me to do. But this, if it came back here, I'd be shorting it. Why? Outside edge of a distribution. This probably looks like Greek to you or something else. And what's going on right here? Let's look at this. Liquidity comes into the book, and then we have another structured trade that's going to develop at 9:30. This is also a short. Let me show you. I'm showing you something different today. I figured to keep you all from falling asleep. This is a sweep. This is support. By support, it is a behavior. It is a icebergs, buying icebergs. And I always ask myself, why are these guys buying anything here? Might they be covering? Are you guys with me? If you have questions, please post them. I'll do my best. Hope you guys are doing good today. Now, the thing about the Trader Lab and about trading in general, there's days, of course, where we don't make profits. We take stops. Maybe we lose some, we win some, and some of us are going to hit our loss limits. I'm going to, with all sympathy and care, get used to it. Because in business, we pay bills, we pay expenses. Then we have these days. This is where you make your dollars because you are prepared for it. You have a plan for it. And if we might accept the trend is down, why would you be taking longs? I'm just asking. Why? Because you're playing a video game. You're not yet ready to be in a business where you can create potentially sustainability. This is another short. Here. Break. It's a trigger. Retracement. Now, let me show it to you. Again, I'm focusing on something different today for you guys. This is Advanced Trader Lab methodology. And what else is here? Out here is a low volume node. Right here. A low volume node is an outside edge of a distribution. What is a distribution? Fancy term, consolidation. So the outside edge is here. And you could see where this 172 contracts traded. The reason it exists is the market ran right here, accelerated. Sellers, let me out. Liquidity. Watch. Now, this is called mean reversion, and this is, I made these terms, not mean reversion, but microstructures. I am trading fractals. What are fractals? Russian dolls. They're inside each other. You know what a Russian Matryoshka doll is, big one, little one, little one. So we're trading inside higher time frames as you think of them. But in the developing RTH, there's no time. There's no clock. There's participant behavior because the auction is made up of the buyers and the sellers. Sellers are here, buyers are here. And what happened over here? We'll see you later. We come up out here. Let's look at it. Now, this one didn't quite it got right on the edge of the universe, right? No precision in trading. What comes back in here? Let's look. Here, same location. See the liquidity? Buyers going to the moon. Buy stops. Why are there stops here? Because retail traders trail their stops there. They're lemmings. No offense to us retail traders. Write this down. Think like a retail trader. Don't act like one. So if you think like a retail trader, you know they're running tight stops because we don't have any kind of muscle. We're like the minnows that are swimming with the whales. And I can assure you the whales are not getting along. They're using counter rotations at the moment to get short. There's your liquidity. This is like a lid on a pot. This is another trigger. Watch. Now, 9:30 Central Time, we have something called the IB, initial balance. What is the IB? First hour's high or low has over 90% probability of getting taken out. Now, I don't know about you, but I'm leaning towards the south side. You guys agree? Maybe down? So, if I understand I have over 90% probability of maybe taking out this first hour's low, the IB, then when I get this, I'm going to short this. For mean reversion outside in into a statistic. Are you guys tracking? And just to add a little more sweetness, I'm below the naked volume point of control and the micro composite volume point of control. And this. Can you guys see the pieces? Are you guys tracking? How are we doing in Trader Lab? Is everybody conscious? How about YouTube? How you guys doing? Please give a like, give the thumb up. This is one of these streams you're going to want to screenshot, especially this is advanced. I don't typically go into these in the stream. This is really more for just Trader Lab participants, advanced processes. There's a library of webinars of this process. And the more important element is the Trader Lab community. This is a serious community. It's not romper room. And let's be real about the business of trading. There's no secret sauce. And there's no the only thing you need. You go out on the internet, and I have to tell you, you could lose not only your mind, but run out of time and assets chasing illusions. I'm going to tell you, this business is not complicated. And there is no simple in the sense of prediction. And I always like to talk about psychology because the biggest impediment for us as traders is psychology. You can learn how to trade in Trader Lab, in my opinion, if you do the work. And nobody's going to hand you plug and play. It does not exist. What does exist is I can help you understand how the market works. I can help you develop trades based on structured trades that I've shared in the Trader Lab. They're broad strokes. Then you make it your own. You're going to find your groove. We have some traders in Trader Lab who they'll trade both sides of this. I don't. I trade one side. I kind of want to get in alignment with a dominant side, if there is one, and only trade from a dominant side. So for me, if I see a long trigger, I may cover my short so I can put it back out again with the structured trades. And remember, over 90% probability. So what is this? This is a short into the statistic and going south of the border. Let's watch. Now, there's more. Really? Yes. What is this? Stops. What is that? Liquidity. Where did this come from? I know. You're going, well, what? This is the micro composite volume point of control and the naked volume point of control. Retail price. What was I trying to do up here? Up here, retail price in this consolidation. I was looking on this day to come out and come back. It's called mean reversion. And it didn't do it. It went, we'll see you later. And we fell out. That's what set this up for yesterday. And today, this, and then where's the stops? Under this low and here and here. This is another target down below. Who knows? Not important. And let's go back and just see how this all set up before the fact. Okay? Now you know. Now, back we go. Stops. Next target. IB. So short through the statistic. This is another structured trade. It's called the IB continuation trade. Watch. Break, trigger, back to here. This is a structured trade. So let's come into this a little bit tighter. Try anyway. Come on. LVN, outside edge, right? This is a short, which I just mentioned to you. The liquidity comes in the book. Absorption is here. Break, trigger. Let me show you this trigger. Now, there's a lot of other ways to enter. By a lot, I mean, once you understand what you're looking at, you can refine these. But what I figured out, and I wanted to share in Trader Lab, is to help you guys learn to read structure, because you have to understand structure in order to be able to execute. So it's somewhat mechanical to help you learn. So I did it this way to help you guys so you could kind of see how to do this. So sellers are here, absorption. See where the sellers are? Why did this is your delta. And I know everybody thinks, oh, it's a positive delta, it's going up. No. Liquidity here. And why is it green? Buy stops. That's market orders show up as delta. Don't be fooled. What's the trend? Down. Why didn't this keep going? It was absorbed. How do I know that? Only because we broke below the buyers and the sellers are below the buyers. Oh, they were absorbed. I don't know here, but I know here. Buyers, see where the buyers took control here? So the buyers are here. Buyers are there. There they are. Hey, sellers are here. Buyers are here. Sellers are there. It's a shootout at the OK Corral. The volume is in here. Break. So I'm going for my IB stat. So the short could be here or not. IB, pull back, and now it's another short. Get below the IB. Watch. Volume is where? I'm going to show you another trigger. Now I'm showing you compound triggers. I'm, again, doing something a little bit different for you guys because I want you to see how you can put pieces together. The volume, see what this is? This node, high volume. Think of it like this is an auction. If this volume is too high, and we do one of these things and we break away from it, it's the shoppers in the store going, I'm not going to pay that. And we leave it. We come back and check it, and it's still too high. I leave it. Then I start another one of these things. I break. This is my IB. I pull back to this here, this area. And where did my sellers take over? Here. I test here. Short. IB continuation trade. It's a short in the Trader Lab. So you'd be short. No longs. Up to you. Not me. You. And where do we come to? Let's look. What's this? Liquidity comes in the book. Do I know what's going to happen with the liquidity? Wish I did. Don't know. What was our next target? The stops. And where were they? Let's come back real quick. So all of this is on the hip parade. The stops are there. 52 quarter. Okay? Just so you know, all this is on, I have it in Bookmap because I trade into stops. Then there's more. Watch. So now what? Where's resistance? Watch. Resistance is here. Resistance is here. This is called VPOC migration. This is another structured trade in the Trader Lab. This is a buy sweep. Now, when I see a sweep, look, there's a sweep here, there's a sweep here, there's a sweep here. Would I be selling this? I could short this for the IB continuation trade. I could. So if I sold this, I have to be looking over here to see where my absorption was. This is my volume. So this is a viable short. You wouldn't get too far with it, but you would be scaled. and then you'd scratch. Then you get VPOC migration. I did a webinar on VPOC migration. It's in the Trader Lab. There's a link in the bottom of YouTube. If you want to visit the Trader Lab community, there's no cost. In my opinion, it's only a personal opinion, it's advanced. It's not for those who aren't willing to do work. It just isn't. You're not going to be able to sustain yourself in this business unless you're ready to say, I wanted a master's degree in trading. How are you going to get it? You go to university or wherever you go to get educated. You're not, this is not a video game. You got to learn, because if you learn, you're going to differentiate yourself. So there's your sweep, same as there, VPOC migration, and this is a key behavior right here. Either we're going to push this way, which would mean get short from an outside for mean reversion, or we're going to reject it. And since the trend is down and we're trying to get here, and I got liquidity in the book here, there, VPOC migration, too high. I hope I can get current, because I really like to get into real-time narration for you guys. But I'm showing you structured trades in Trader Lab. This is Trader Lab trading. You might want more activity. I have no idea. But I think you would have a pretty nice day. Notice where we come, right here. This is called a variable high volume node. I don't know where I am relative to the market at the moment, since I can't see it, but I'm just showing you these trades. Maybe I should just move along. Now let's watch this right here. Absorption, 334 sell stops. Thanks for playing. Broker sends you a coupon to the buffet. This is too high. Watch. Let's watch this, and let's watch this. And this. So I don't know what this stuff is all about. Was this something, a news event or something happened here, guys? What was this? How we doing in YouTube? And you guys doing okay? Please give a like, support the stream. It's the only way we can encourage Bookmap to keep this stream going. Since there's no cost, the only way they can get a sense of what's going on is if you guys hit the like button. So I hope I'm not imposing on you, but it would be useful. I think this was news. It looks like news. This came out of left field. So, and how do we trade this? Well, there's a couple possibilities. If we return up in this area, it's a short. It'd be called mean reversion. That's the mean. So it becomes outside in rotational trading. And the locations are here and here and out here and this. I don't know. Let's see what it does. Outside, location, outside. Let's come back. Variable high volume node there. So this is the way this works is that, and again, we don't know. I mean, why not here, right? Well, there's no location. Where's our location? This is like real estate. Location, location, location. There and out here. Low volume node. Same thing you see me doing. Oh, consumer sentiment? Okay, thank you. All right. Liquidity comes in the book. Now, today I'm hanging out with you guys talking about the integration of the heat map, which is the limit order book, location, 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 location. These are structured trades, okay? You can learn these. Doesn't mean you're not going to take stops. Everybody takes stops. Everybody has overhead and cost of production. Got to get over it. This is not a business of being right. It's a business of statistical probabilities, edge, and random distributions of outcomes. The business model is gaming or casinos. This is a business of gaming, not playing games, gaming. And if you want to understand gaming, look at the business model that is extremely successful that casinos use. It's gaming. So they only control how they play the games. They don't control how the gamblers play their cards or the cards coming out of the deck. If they can't do it, then why do you think you can do it by being able to predict something? How about you can't predict anything? All you can do is wait for the trades that you understand that have a statistical edge. The games that casinos play have statistical edge. If you take this trade, this is your scale. It's called mean reversion. Okay, and this is a structured trade in fair lab, so you're going from there to there. I'm okay with that. Are you okay with that? That's almost 10 points. Then south of the border, let's look at our liquidity. Remember where it was. It's there, and it comes back in over here. Let's see what happens at the liquidity. I don't know. Liquidity, pullback. So this trade would be just from up here, and then you have to have trade management. And that's something you have to vet. Everybody does their own thing. Well, shows you what I know. I don't know what's going on. There you go. Now we're current. Okay. Well, post your questions. I'm going to make a couple adjustments to my charts over here now, and we can go from here. Let me see. Making some adjustments. One moment, please. Okay. Anyway, not much to say, except if you're trying to get long, I'm going to ask you why. So anybody who's taking longs today, you ought to step back and understand that you're playing a video game. You're not acting like a professional. That's not to be insensitive. We all have done it. It's a matter of when you're going to stop doing it. Because if you're taking counter trend trades, you're missing the opportunity, which is the short side. Now, and this is not being judgmental, but my objective is to help traders build out and understand the business they're in and how to operate in the environment. The environment we're in, this is a liquidating market. It's a bear market, in my opinion, in the time frames I operate in. Other traders think it's the bull market, and they're entitled to their opinion, and I'm sure they're right for themselves. For me, the dominant side is the sellers. It's been that way since the all-time high, and it's not evident there, but it becomes evident, to me at least, when we start making sequential lower distributions in a higher time frame. So this is the high volume in the higher time frame, and if it's too high, I then have high volume here, which means this is no bueno. Now we're down here, and if we fall out the bottom of this, we're just going to keep going. That's why I'm bearish. It's not complicated. This is the auction. It's all right in front of you. Let me see if I can show you. This is Investor RT. Let me show you this, and you can see why I am well, the word bear is only relevant in a higher time frame. This is the all-time high. So you can see how here, for example, consolidation, broke high, consolidation, broke low. And that, look at that day, too high. And there's that orange line. This is the high volume in this consolidation. We rejected it. We got under this one. We rejected it. You see how this works? Too high. We're out of here. Test this one from over here. Too high. We're out of here. This is what sets up a bearish scenario for me, because the market is auctioning, which means it does rotate, but too high. Too high. Too high. and this is yesterday. Too high, too high. Next target down here. We're below it now. Under the stops here. Hasta la vista. See you next time. Where might we go? Here, eventually. Under here, and subject to. Now, along the way, we will rotate. That's why as day traders, we can be doing anything we want to do. But when you have a breakout like this, and when we came back in here, and remember yesterday in the stream, we were selling this. We were selling this. And in the stream, and you should watch yesterday's stream, I said, if we come back and close under here, inside of this, then that. That's all in yesterday's stream. You should be watching these streams every day, if you find them useful. Now, let me see if I can do this without making big trouble. There. Questions, please post them. So, I don't know about you. I'm not thinking about a long. Anybody here want to get long today? Do you think this is a heck of a deal? Roy Rogers. Don't tell me you have a dog named Trigger. I didn't say horse, dog. No, the CLN notes are exported from Investor RT, which is my higher time frame. And so are these high volume nodes. It's just, these are measuring where the high volume is, the high volume. And I can adjust all of this. The low volume node is the outside here. All these are exported from Investor RT. And if you're interested in Investor RT, you should just come to Trader Lab and, and you don't need to use Investor RT. There's other platforms. But I've been using Investor RT because it's highly accurate for auction and volume profile. And it has everything in it but the kitchen sink, like most high tier software products. But I've been using it, I think, since 2007 or 2009, and I really don't want to spend time learning another piece of software, So this is the volume point of control. This is the highest volume for the day. As it moves down, think of this like shopping. This is the retail price. Well, if this price becomes too high, if we come outside, it's called mean reversion. We come back to it. That's why when we came out here, we came back to it. If it's still too high, we're going to go, no, I'm not paying that. Hasta la vista. So no longs. I'm getting a question about a long. How would you improve on that trade? Don't take it. Sorry, you asked. That's how would I improve on it. Because the opportunity is not on the long side. Longs are opportunities to get short. Now, if you can get long and get short and you can change that fast, then by all means. I only trade the dominant side because I'm not interested in getting out of alignment. That's a personal thing. Because I've done that. I mean, I used to trade everything you guys done, I've done. Except I did it a long time ago. That's the only difference. Trading 46, going on 46 years. We all do the same stuff. No, we're all the same, So I would get, take a counter trend trade and, maybe there's 6 points, 4, 5, 6, whatever it is based on the volatility. And then the 20-point trade I'm not on because I'm working the long trade. And then by the time I get out of my trade, in other words, I don't go, oh, I'm long here and I'm going to sell here. How do I know where it's going? So I just take the shorts. This is a nice short here. So no reason to be long. So not to be insensitive to your question, how would I manage it? I wouldn't take it. I would short. Trigger waiting at the door. Roy Rogers, Dale Evans, Clarabelle? No, Clarabelle. What was the name of the guy in the Jeep? I forgot. How are you guys doing? You got questions, please post them. By the way, if you're visiting in YouTube, please give a thumb up. Support the stream. Use the link in the bottom of YouTube. If you're interested in visiting the Bookmap Discord Trader Lab community, I can assure you it's not typical. It is advanced. This is an advanced trading process. But it doesn't matter how long you've been doing this. It's not time in. But if you've been using a process, whatever it is, and you get random winnings, because we all do, doesn't matter. Anybody can have a winning trade. That's not the issue for us. It's about edge and only interacting with the other participants when you have a statistical probability of a positive outcome. Every interaction has a random outcome, but when you have a statistical edge over time, just like the casinos, you're extracting more dollars from the gamblers than you're paying them. And yeah, you do pay the gamblers, so you have to get over it. Psychologically, it's all about being right and getting approval, right? Get that pat on the, you're such a good boy or girl. Well, it doesn't work that way in trading. The way you measure yourself in trading is having a statistical edge and then being able to execute it. It doesn't do you any good if, in theory, you can sell near the high and buy near the low, except you can't do it because psychologically that's not in alignment. So it's learning how the market works, learning structured trades, and then aligning it with your psychology. There are some traders in Trader Lab that'll put a trade on and go to the gym or take a nap. We have other traders in Trader Lab who are very active. We even have some traders in Trader Lab that are going to potentially counter trend trade. Now, I don't think that's a good idea, but that's because it's not what I do for me, but it doesn't mean other traders can't do it. But statistically, on a day like today, there's no reason to be taking longs. Statistically, why would you want to join the retreating army? Think of this like an army. The longs that are sitting in here are getting steamrolled. Do you want to become a long? Or do you want to use the counter rotations and the squeezes to position to join the advancing army? Think of it like a counter attack. If we get a counter rotation, let's substitute the term counter attack. What happens to these guys who push back? They get absorbed, and then the trend continues. So why would you take a long? Just a question. Me, not so much. Does that make sense? Please give a like if you're in YouTube. Yes, Snuggy Boo. I haven't seen you here before. Thanks for visiting Trader Lab. Have you been following Trader Lab? And more importantly, have you come to the Trader Lab community? If you haven't, anyone who's visiting in YouTube, if you guys aren't taking advantage of this, there is no cost, and I cannot say how long it'll still be available. I mean, it's not, Bookmap is very kind to allow this to exist. It's a 24-hour, 7-day-a-week global community. We have traders all over the planet. So if you trade ETH, doesn't matter where you are, there's support and there's the community there. Traders helping other traders. It doesn't matter how long you've been trading. If you're a new trader or a more developed trader, it doesn't matter. By the way, it doesn't matter how long you've been trading because a lot of us, I traded for years without an edge. Instead, I was using systems and indicators and optimization processes, walk forward testing, all this kind of stuff, thinking that that's what the business was. And most of us start out, I think, looking for certainty, confirmation, and predictability. Is that you? It's all of us because we don't know the business we're actually in. And now when I started in 1980, we had no indicators. It was very much classical bar charting and measured moves. Over time, as indicators, Wells Wilder, that stuff started coming in, I was pretty excited about it. And I started working with these, quote, indicators because they work at times. But overall, they don't have an edge, but they work. So you get winning trades. Is that you? You have winning trades. So we think it's just make it better. It is so logical. But that isn't the business. It's not a business of winning trades. It's a business of statistical edge in a random environment because you can't predict the outcome of the next trade. But what we tend to do because of our need to be right and avoid pain is to try to create certainty. Is that you? It's all of us. Here's the thing about Trader Lab. If you understand the business you're in, that doesn't exist. How can you solve for something that doesn't exist? So we're trying to solve for certainty to avoid risk and pain of loss and paying the other guys, the other participants. I understand it, you do too. But we go on a quest for this certainty. And we can spend years, I did, years trying to achieve it. And the catch to the whole thing is you have winning trades, you have multiple winning trades, you have winning weeks, even winning months, yet you're still moving in the wrong direction. So I tried to solve that with trading systems. I figured more indicators, more hybrid indicators that I created, and then using optimization processes and walk forward testing that I really had it. Well, all I had was more of the same, just did it better. But the results weren't better because then I had to go and continually re-optimize. If you're doing that, whether you do it eyeballing a rotation, tweaking a oscillator, or whatever you're doing, doesn't matter. All the same. Doesn't matter if you're using VWAP. Doesn't matter what you're doing because everything works sometimes. You have to have a cohesive process that is anchored. And I cover that in my primer webinar about anchoring inputs. Because the casinos, if you want to think about what they're doing, they have anchored inputs. What's an anchored input? They have games like blackjack, and they play them the same way. This is what the Trader Lab looks like. It's a great community. There's a lot going on in here. Charts, conversation, interaction, mutual support. Why'd you do that? Huh. I ask myself the same time. By the way, do you make errors? Everybody does. We're human. So there's no perfection in this. Mental foundation for profitable trading. Yeah. By the way, the toughest thing I think in all of this is being able to deal with your emotional states. And the way to manage, I have found, emotions, if you don't have statistical probabilities, in other words, something tangible, all you have is emotional stimulus. And that's a lunatic in your head. Fear, greed, FOMO, all that, right? Well, if you don't have something figured out, thanks, Boomer. If you don't know where you're going to trade and the statistical edge, you're out of control because all you have is emotional stimulus, and emotions release chemicals in your brain. It's like being drunk. You wouldn't drive drunk, hopefully. Well, then why would you trade drunk? Anyway, Trader Lab. Now, here's the other part of this. I want to show you this. And by the way, you're all invited to come to Trader Lab. This is what you ought to do first. This is the primer webinar that I did. And it's about an hour long. I did it in 2021, I think. I guess that's when I did it. And it's the high-level overview. Got about 32,000 views. You might want to check it out. Then there's Meet the Trader Lab. This is advanced trader education. This is research, development, things of this nature. Data mining, tells you all about it, gives you a high-level overview. Then watch this one. I planned, I saw, I traded. This shows you, encapsulates what I show every day here in the stream. High-level overview. How do you detect the possibilities before the day opens? Then it happens. It sets up based on your analysis and then the actual trades that align with all of this. These three. And the other ones you might want to look at, day trading, why most traders using indicators fail. And then, are you trapped in trader groundhog day? This is me. Groundhog. That's when you have random winning trades and you think it's tune it, tweak it, make it better. Logical. Except it's not the answer, it's the problem. We just don't know it. That is the catch. So if you're interested in Trader Lab, use the link in the bottom of YouTube. It's available to everyone at no cost. Please give a like, and remember this stream will be available. Some of these structured trades I shared today are advanced concepts. I don't typically share them here in the stream. There's a lot more going on in Trader Lab than I can share in the brief time I have with you here. There's a lot of support in the Trader Lab community. Plus, I have to mention to you, Bookmap offers a lot of additional education. Stocks, options, crypto, Orderflow with a high-tier tool like Bookmap. I mean, what is this Orderflow thing all about? Why is that give you a potential edge over other traders who have no understanding of Orderflow? And I don't use indicators. Let me tell you about indicators. Everything works sometimes. The thing about an indicator is most of us come into the business thinking it's a business of indicators and time frames. I get it. Been there, done that. We all do. Okay, no big deal. The problem is everything works randomly. However, and the simple analogy is an indicator is the tail of the dog. The participant behavior is what creates the output to an indicator. But the indicators are not context oriented. They are just price or derivative of price oriented. If you understand something called context, which is what I show at the top of the screen, which means south of the border, you would be aligning indicators for potential continuation trades, whether it's divergence or something else, okay? However, my indicator is between my ears. It is by mind. And this is a language. So instead of letting the indicator be a Google Translate, which is really what it is, it's translating price action, I'm doing the translation. I am reading the language of the market. And when I see behavior right here, I understand it. And I'm processing it in my mind. Now, that's good because I'm not waiting for a backward-looking indicator to tell me that I should get short here. I'm going to get short here. See? So what does that do for me? Better entries, better risk management, shorter distance to get risk neutral, and over time, what is that worth to me? I'm going to say night and day for me. And then you couple that with structured trades that I share in TraderLab, like this is a location for a structured trade. It's a short. Can you see the methodology and why it might make sense? Please give a like if you're in YouTube. And I know I'm probably bugging you a bit about giving the thumb up and all that. It's the only way this stream will continue. And it's the only way the TraderLab will continue. So that's why it's important. So please do that. That would be kind. Well, let's watch this here. Let's just watch this. Let's watch the order flow. Let's watch the heat map. Let's watch the limit order book. Let's watch. Let's start seeing how we can put these pieces together. This is an outside edge of a distribution. I've got this out here. This is resistance at the moment. And it doesn't mean you just step in front and put a little order out there. It means we want to see behavior. Let's see if we come back here, what might happen. The way I operate, I anticipate. Write this down. You got to anticipate to participate. So what is this? Click. Are we impulsing in or are we looking back at behavior in the auction? The outside edge of this distribution is here, 647, low volume node, outside edge. What else is here? This. So if I'm looking for a trade, this is not a recommendation for continue, and by looking, it means where's my next trade? If I think the trend might be down, then I'm only taking shorts, and I'm looking at counter rotations for what's called continuation trades. There's also another element here. If this is the outside edge, and I have this, so this is my resistance-ish, then I'm looking for something called mean reversion, which is outside in. And if it doesn't get here, I don't have a trade. Simple as that. This is a buy sweep. This suggests counter rotation. I don't have a trigger. In other words, this is not a trade I would take. It has to be out here to come here. So the way it would work is I'd come out, and if I get a trigger, location, 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 that's my target for a scale, and then helmet, and then trade management. I'm just telling you this is a trade, advanced methodology, TraderLab, you can learn it. Are you guys following me? Willers is asking me, do I keep ATR for rotations? I am conscious of ATR. But I'm conscious of ATR, but ATR is an average. There's nothing average about today. We're in a trend. So that's why a lot of this stuff, it's to me, it's just ancillary. There's nothing mechanical here. It is behavioral. So am I aware of ATR? Yes. What do I do about it? Nothing. I trade what I see. It's a priority or hierarchy of inputs, guys. 1 second, guys. I got a lot of racket going. I don't know if you're hearing background noise. Are you? Is it coming through? How are we doing in YouTube, guys? You guys like this? This is Trader Lab. I believe anybody can learn the trade, and I believe if you come to Trader Lab, you can learn the trade. And I mean learn to trade. You need to understand not only the business of trading and the psychological impediments, you need to learn how to solve for those because they impact all of it. Everybody's the same here. We're all wired the same way. We're human. And part of being human is we're wired to avoid risk. It works good, with the saber-toothed tiger and survival of the species. All very good. But those elements are still operating here. And yet here we have to run towards the burning building, not away from it. So we're pushing against primal wiring. The only way I have found to manage emotional fear, fight and flight, all those things, is to know where you're going to trade and to know if it has a statistical edge. The tangibility of statistics gives you something to hold on to. The emotional states are chemically induced. All that does is disrupt everything and supersedes your intellect or your consciousness. If you cannot supersede your conscious intent because the emotions or the chemical released in your brain is stronger, the only way to manage it and have even an opportunity to manage it is with a tangible statistic. In the Trader Lab, you would have a trade plan. You would open your binder to mean reversion in a trend configuration. You would have examples of this trade right here sitting in front of you. You would know in mean reversion what the statistical probabilities are. Your heart would be pounding because of your fear, your adrenaline, and the chemicals being released. That's what you would experience. Yet, the difference is, instead of being overwhelmed with fear, you would know that if you wait for the location, that you have X% probability of the market coming back here before stopping you out. And yes, you will get stopped out at times, and at other times, if you have an edge that is positive, you will come here before taking the stop. Does that give you the ability to manage your emotional states and maybe differentiate yourself from other traders who are being controlled by their fight and flight, their fear, and their emotional triggers? Is that important to you? Do you understand yourself? And it's not willpower. I thought it was, by the way. I thought it was, I'm going to be tough. And then I tried behavior modification, did that for a couple of years. I thought, well, it's my behavior. I can change it. I had a big rubber band on my wrist. I would snap it. I was trying to change my response. Doesn't work because this is the response that if you step in front of a bus, you don't think about jumping out from in front of the bus. It's on autopilot, Well, it's still triggered in this environment because of risk, because it can't differentiate between intentional risk and protecting you. So it's a good thing for stepping in front of buses, but it's not a good thing for trading. So how do you manage it? Trade plan. Where's the trade plan done? Outside of trading hours. How do you trade? You bring your plan here, and you can build a plan in Trader Lab. That's the whole point of the Trader Lab. And then you bring it. And then when everything lines up, you push the plunger, put your helmet on, and you either take your stop or get your scale and then take that stop and scratch the trade, or get a scale and then you have a trade management process you vetted and you hang in there and you do your thing. That's as complicated as this business is, aside from being random. Does that make sense? How are you doing in YouTube? And remember, this stream will be available over this weekend. I think this is something everybody ought to review this weekend because this encapsulates the Trader Lab process. And the Trader Lab is about the business of trading. You can see it right here and every day in the Trader Lab and also here in the streams. What was our last short? You do remember. structured trade. I mean, there's more. There's trades in between if you want to trade these, and these are more advanced. I don't really go into this stuff here, but these are also structured trades. They're all the same thing. Remember, if we come back up here, we want to look at this, not a recommendation. I see a lot of new names here. Ben, I don't know what the last trade is taking it twice. If the trend is down, I take trades. You got to develop an understanding of when we're in a sloshing market that's just rotational or a trend. We're in a trend. You can be subject to your plan. And these are all things you have to formulate. When you say, would I take a trade twice? I might. But the plan is what tells you what to do. What I do is subject to my plan. My plan is not the same as other traders in Trader Lab. There's other traders in Trader Labs are like whirling dervishes. And that's okay because they've done the work. They have a statistical edge. They might take the same trade 3 times. I might take it once. You know what I mean? It's an individual thing. That's what the Trader Lab is about. There's no, and Ben, I know why you're asking the question. That's okay. There's not one way to do anything. There's no one size fits all. There's no do what Tom does. You can learn from what I do and what I've extracted over 45 years of trading, both professionally and otherwise. You can learn. And I believe I can teach anybody how to trade if they do the work. I can't do the work for them. And it is not plug and play. You know, trading, and this is not for you, Ben. This is generally, for everybody. Trading's not a mechanical process. And yet we kind of think it is. When this happens, you do that. No, it has to qualify. So what I figured out was there are certain trades that are qualified in certain conditions. That's called context. In a trend configuration, which is what we're in, it's only shorts for me, and there's certain trades that are vetted that I've shared in Trader Lab, and everybody needs to vet their own trades. And you can start with one. You only need one trade to start because the idea is to build a process template of conditions. If this, then that. If not, then what? If this is too high, if this, and I break, then that. If I come back and test it and it's still too high, if this, and it's too high, then what? Then down. If I get through it, then what? I got nothing. So I know before the market comes here in a downtrend, subject to, and it could keep going. It's not about anything more than that. This is my next trade. Now I already, how many minutes ago did I discuss this with you? Almost a half hour ago. So I'm just sitting here waiting for this. And if I don't get it, now it doesn't mean I can't trade elsewhere. I do have other trades. But in the Trader Lab, it's really more about structured trades. So the point was, one structured trade gives you a template. Once you build one, so it has specific conditions where it's qualified, you know what a trigger looks like, where it shows up. You know the range you have to qualify it. You know how to enter, how to manage the trade. You know how to get risk neutral. You know where your stop goes. You know if you get stopped out, that's life. You know if you get scaled and scratch the trade, that's a good trade. You followed your plan. If you get stopped out and followed your plan, that's a good trade. And if you get the trade on, you get scaled and you have a trade management process, that's your job. You start with one. When you prove to yourself that you can design a structured trade, and that's why those 60 PDFs, I shared them so you have something to work with, so you're not wasting your time with ideas. I've gone down, that's what Trader Groundhog Day is too. I went down so many dead ends. It's like going down an alley and then you get to the brick wall. Do that for years. That's what I did. And I mean years, not 1 year, not 2 years. And because nobody told me the business I was in. All my friends were floor traders. When I started as an off-floor trader, there were no off-floor traders. And So there was no day trading either. It was swing trading and trend following. So that's what I did. So short-term trading for me was 2 to 3 day swings in the big S&Ps. And that'll get your attention. Let's see. Remember where our next opportunity might be, and it's not a trade recommendation. So I'm sitting here. I have no trade till here. So we'll see what it does. And you guys, I think I'm going to run out of time. Oh, hi from Singapore. You're up late. Well, thanks, Cross. Welcome to Trader Lab. By the way, if you guys are visiting in YouTube, use the link in the bottom of YouTube. It's no cost. That's all I can tell you. I always ask myself, if I had found me, who actually learned something after a while, what would I have paid for that? I know back in the day, when I started out, there was no internet, no computers, nothing, and nobody trading off floor. What would I have paid to learn, quote, how to trade? How about anything? So what sustained me was my passion, my curiosity, and my belief in myself that I could figure this out. What I didn't understand was I'm in a gaming business, so I was looking for predictability. I was misdirected. And it wasn't because of anything, because there was no off-floor traders. And if there were, I didn't know any of them. And I was sitting down at the exchange in Chicago, and I didn't know anybody. Everybody was floor traders. They thought I was out of my mind. And back in the day, when I first started, technical analysis was really looked down upon. It was considered voodoo, if you can imagine, because everything was fundamentally based. It was fundamentals, reports. And when I first started trading, it was grains, just so you know. And I actually worked with one of the largest grain traders in the world at the time. So it was all grains, and then I learned spreads. I won't go into them, but I'm just going to say and I didn't even come into this business to be a trader. I came into this business to hedge interest rate risk. So T-bills. So, just saying. And then I think it was 1982 when the S&Ps came out, so I gravitated to them. Please give a like if you're in YouTube. Use the link in the bottom of YouTube. Visit the Trader Lab. See the algo come in here? Or not, the liquidity and the reaction to it. So this is a pressing liquidity. It's like a pressure pot in the pot. Support. Where's our resistance? Remember what we're trying to do here. And it doesn't mean anything other than location, location, location. If I come out here and I get a sell trigger, this is where I'm trying to go, mean reversion. That's what you're seeing here. We are reverting and rotational. So this trade is an outs, and it has to come out here or it's not qualified. It's here to there, and then you got to look at this, and if they fall out the bottom. I hope that makes sense. I've got 7 minutes left. Please give a like before you leave. Come to the Bookmap Discord Trader Lab community. Which way? Well, Fairfax City, the way the edge is outside in and the trend is down. So for me, unless things change, and even then if they change, I just put the car in the garage and sit in the Barca Lounger. Basically, it's this. So for me, and I'm not saying, and that's not a trade recommendation, I take stops. By the way, do the casinos pay the gamblers? Yes. What is it? Cost of production and overhead. So we got to get over this thing about taking stops. I'm not saying we like to pay bills. I don't like to pay my rent if I was renting, or certainly don't want to pay my electric bill. But then I'd like to have lights. So I pay my bills, right? You pay your bills. Overhead and costs of production. Casinos pay to gamblers. How do they extract dollars from the gamblers? They pay to gamblers. But because they have a statistical edge, assuming they play their games, and think about blackjack, they play them exactly the same way. They only control how they play the game. They don't control anything else. The cards coming out of the deck, how the gamblers play, they don't control any of that. So we can't control the other participants, what they do. We only control ourselves. How do you measure yourself? It's not P&L. It's statistical edge and executing the edge. I can assure you the casinos don't take blackjack and change it if they pay a gambler. They just deal the next hand. And it takes discipline to do that. But why can they do it? They're not attached to the outcome. They are in a business of following a plan that has an edge. And they only play the games with an edge. They don't make them up. They don't FOMO in. If they pay a gambler on the last hand, they don't say, well, let's our next hand in blackjack, let's make it 15 cards. It'll be better. Really? Is that what we do? We make it up. That's not the business. That's gambling. I always say if you're going to gamble, go to a casino, get the cocktails, ticket to the buffet, and if you leave enough dollars there, they might give you tickets to Adele. Why? Be in the business. Be in the business. Don't be a gambler. Please hit the like, guys. Dale, come to the Trader Lab. You can get all this information, and anybody who's visiting in YouTube, come to Trader Lab. There's no cost to this, and as long as it's still available, I would suggest take advantage of it. If you see something here you think that can help you on your journey, and this doesn't mean you'll be successful, because many traders are not willing to do the work. So no trade. Didn't come to location. Location, location, location. So I have to be okay with this. I just go, well, didn't get to my trade. It's not my trade. It's not my, I have nothing to do. Doesn't matter. Now we're going to watch this location. This is the better location, though, because I have nothing here. Anyway, please give a like. I've got 3 minutes, final questions. And if you have questions about Bookmap, there's loads of education in the Bookmap server. There's no cost for it. Big cap, small cap stocks, options, crypto, order flow, market maker behavior, algorithmic behavior, how to use a high tier order flow tool like Bookmap. What does this do for you? How can you use it? Can you gain an edge with order flow? Yes, in my opinion. I wouldn't trade without an order flow tool, and I certainly wouldn't trade without Bookmap. Obviously, I spent years trading before I got Bookmap in about 2015, and then I had to learn how to trade order flow. It's not mechanical. It is nuanced, and you have to understand what you're seeing. Everything takes time. To become a successful trader, you don't just drop into some chat room and all of a sudden now you're pushing the button and you have an ATM in the basement. I think that's naive, and that's not Trader Lab. Trader Lab's advanced. You're going to have to roll your sleeves up, and really this is like an advanced degree in trading. And it isn't just what I do. There's a lot of contributions from other traders in Trader Lab. It's all about leveraging the collective experience of the traders in the community. Our senior trader has over 50 years. I've got, well, going on 46, both professionally and otherwise. I used to manage funds across a lot of asset classes. Trend following at the time, because when you're managing dollars, you're not day trading. So a lot of currencies, trending markets, bonds, that kind of stuff, and spreads, different, and S&Ps. Please give a like. Got 1 minute left. I appreciate you visiting Trader Lab. I'm going to make this available over the weekend. I strongly suggest, if you're interested in understanding structured trading, the business of trading, that you watch this. Screenshot it. Make it part of your arsenal. Take these ideas and reverse engineer them. That's what the Trader Lab is about. Sharing ideas, and then you build this out into something that fits your psychology. And everybody's different. That's why there's no plug and play in trading. It's learning and then integrating your understanding into something that you can operate in that fits your psychology. Please give the like. I'm out of time. Thanks so much for visiting the Trader Lab today. There's 60 PDFs of structured trades you can download, plus a library of webinars that I've showed you. They're all available to you in the Trader Lab. Stop in, say hi, introduce yourself. I'd like to meet you in the Trader Lab. Thanks, guys. Have a great weekend. Don't forget to leave a like on the way out, and I look forward to seeing you guys soon. Take care.